Hey guys, this is Brian. I just wanted to go over a trade that I took earlier today. I got a lot of questions about it. This is Aussie dollar. I just wanted to go into my thought process as to why I took the trade and why I scaled in. We have the daily time frame here, and essentially what I'm looking at is my bias is still bullish. Right, we've had a drop off after COVID, and the price has been correcting ever since. We are still breaking these highs. I mean, these are from 2018, so they're not entirely relevant. But my idea is that price is still bullish, even though we have these drops here. I'd like to see price come up into this area and then kind of determine what my bias is from that point. With that being said, I have my area of interest being this daily order block here. This, for me, is my area of interest because of a few things, right? The basics. We have a break of structure here, which generates an order block. It could be anything in here, but essentially what we're looking for is that that candle that pushes price to break structure, which to me is this one right here, right? This candle leaves imbalance along the way, or inefficiency, where this candle does not quite meet this one. It did attempt to fill the imbalance, but it didn't quite fill it all. So to me, there's still an imbalance here. There's still orders, and we have the daily here. So as price was coming down, I was thinking that price would tap into this and react in some way. It did react very well, and I've been looking for longs in here since. And I'm confident, or I have confidence anyways, that price wants to continue at least through these candles here, based on the inefficiencies that were left along the way. We can see that there's inefficiency here. There's inefficiency here, and there's inefficiency here, which has now been filled. All right, so this is my thought process on going long, that we've got a good reaction off the daily order block, a break of structure, and imbalance to go with it, right? So price is now filling this imbalance as it goes up. Let's look at the 4 hour, right? Now we have a couple areas of interest. We do have this 4 hour order block here, where it left structure behind and left a bit of imbalance along the way. All right. So for me, this area is something to watch out for when price gets into it, right? But we're not quite there yet. We're pretty far away, so I'm not too worried about this. This is just on the back burner for now. Another level of interest I have is right here. This again, 4 hour order block, where price then breaks lows and creates a little imbalance along the way. This imbalance is a bit subjective in the sense that this candle comes here to this level and this candle comes up to this level. But if we're just talking from this candle to this candle, there is imbalance in between. For me, I like to think the imbalance still exists and price will gravitate to this level and potentially react off it, fall to the downside, or continue upwards. I'm not sure. But with that being said, I did make an error in my analysis at one point, and I drew a 4 hour order block at this level, which is false. This is not a 4 hour order block. What do we need for an order block to be created? The basics, again, we need a break of structure, right? So if this candle came down here, but this one was actually lower, it wicked lower than this one. So it didn't break any structure. It's not an order block, right? But I drew it anyways, so I'm going to continue my analysis and my breakdown as if that hadn't changed, right? So price is moving its way up to it. I'm in this area now looking for longs because I do expect price to come into this order block. Again, it's not an order block. I thought it was. My trade idea was that it was an order block, and I looked for refined zones within it to target. And I planned that out, and I traded my plan. And that's the whole concept, so that's all that matters at this point. So we'll go down to the 1 hour, right? And I refined down to this 1 hour order block, which is very much an order block. As we can see, it's denoted by a break of structure. And it left imbalance along the way, right? Giving this order block a little bit better of a chance of being hit, right? So at this level, I'm looking for longs. I'm looking for longs to trade into this area here, right? So if we look at price, right, there's a lot of messy price action to the downside here. Price slowing down as it approaches this daily order block. We get a severe reaction here. We're getting breaks to the upside, right? So still very, very bullish off this daily order block. And we see price starting to navigate into these areas of interest here, right? So we can go ahead and scale down to the 15-minute time frame and take a look at what we have, right? We do have price creating a series of higher highs, lower lows, right? We know that, right? Higher highs, lower lows, higher highs, higher lows, higher highs, higher lows, right? Right? Still bullish. We have a bit of a retracement. So what we're going to do, my entry was on the 1 minute based on a little bit of 5-minute structure, and I'll go into that in a second. But I know a lot of people like to trade the 15-minute, and that is perfectly fine. The only reason that I like to trade the 1 minute and the 5-minute is, I don't know, I enjoy it, honestly, and secondly, it refines my stop loss a little bit more, so I can have a little bit more return on my time invested and patience and all that, etc. Everything is based on the higher time frame analysis. I don't just look for structure on smaller time frames. I get a lot of questions about that. You can essentially trade 15-minute structure looking for 1 minute, 5-minute entries, and just scalp and just look for target areas within that smaller range, which I do occasionally, but in this case, this was a little bit different. I was looking for something a little bit more with a higher return, a higher target area, just because of what price is doing on the higher time frames, specifically reacting severely off of the daily order block. With that being said, another thing that I like to look at when I'm entering trades is just what is happening in each session throughout the day. Where are the highs and lows of each session, the London, the New York, and the Asia session. So I have this kind of map, I guess, that I use. It's not an indicator, I guess, but you can find it. It's just called Asian Session Range. What it does is it highlights the highs and lows of each session, so you can kind of see where price was throughout each session. In this case, I did use this based on a trading idea. My trading idea on the New York low, which we'll get into here in just a second. So I'm going to play this forward. Right. So as price started to New York closed here, and we got our low here, right? Created a pretty strong order block. It also created equal highs up here. So let's draw this in. We have equal highs, which means that there's liquidity above it, right? So with that being said, when I was looking at this trade, it was closer to 10 or 11, right? So right now we're looking at 5:30 p.m. I'm on East Coast U.S. time. Now, because price formed equal highs here, I'm confident that price will eventually or shortly after this move to this upside and clear this liquidity out. All right, we can think of it like this, right? There's liquidity above it. We don't have to target above it, but we can say that there's liquidity above it. Excuse me. Right? There's liquidity above this area. And I like to leave notes like this because when I switch between time frames, when I switch between pairs, I want to know, what to expect. All right. I don't want to have to reanalyze every time I look at the pair, right? It's good to take notes. A lot of times I'll sit here and I'll take a series of notes saying, bullish bias, looking for longs on the 5-minute structure, whatever. And I'll just leave a little note right here. So every time I look through it, I can reference it very quickly. So let's play price through, right? We get a sweep of these highs. So people who are trading support and resistance, right? They see 1 tap, 2 taps. They're hoping the 3rd tap will hold, right? We know this because this is what retail traders do. They trade based on patterns that essentially, I believe anyways, that the market fabricates to liquidate and trap retail traders. You can believe whatever you want, however you want to. It doesn't matter as long as you have something to kind of hold on to help your understanding of what price is doing, right? So let's just say price is just an algorithm, right? It's just robot trading. The fact of the matter is it logically probable that large banks, institutions, Roland, whoever's got all the big money, is it reasonable for them to have a coordinated effort throughout every session to hold certain levels of support and resistance, or trend lines for that matter? If you draw a trend line and you see that price is holding to it exactly as such, why do you think that is? You got to think about it in logically. It's not holding because retail traders are selling and buying at these zones and it's making price hold there. It's manipulated. It's fabricated. These are the things that people look for when they're trading, and they're not entirely sure what they're doing. They think they know what they're doing, but at the end of the day, they might get thrown a bone here and there. But the idea is, when these zones are created, equal highs, equal lows, people who are trading things like support and resistance or trend lines, they get in, they say, okay, we got a tap here, sweet. We got another tap here. Okay, we're going to look for a 3rd tap here. We're going to place our stop losses here. If they haven't already gotten short, right? There's a severe reaction in this area. They might get on short right here. Put their stop losses above, right? So then price does what? Price then sweeps above. And it takes these highs out. It grabs the liquidity. And then what happens? Breakout traders who are going long take this area and they say, okay, it's time to go long. We got a big, strong, bullish candle. It closed full. They might have orders here to go long. They might enter manually. And what are they doing? They're placing stops below this level. Oh, sorry, not breaker structure. Right? We have liquidity right below this area. Right? Right? It's not a clean equal lows, but it is an equal lows nonetheless, right? We have a price bounce into this area, a reaction, comes right back into it, and then it continues to break these highs, right? So people are thinking, okay, here we go, right? We failed on the shorts. It's going long. It broke out. We're going long. They place all their stops right here, right? So first move, grab liquidity from the top. Second move, grab liquidity from here, Now, because we know how an order block is created, institutional funded candles, right? We know that large orders are placed in areas like this where it generates imbalance, breaks of structures, and all that goodness. Now, clearly, this could be denoted as our break of structure from this area here. Again, my trade idea was based on the 1 minute and 5 minutes, so there's breaks of structure throughout here, which I will show you in a little bit of time. Right, so let's go down to the 5 and take a look at what we see. Right, again, this is our low. I don't need this on anymore. We get the idea, right? New York low, just a session low, not a huge deal. The core concepts are we have an order block based on breaks of structure. Right, we got a break of structure. We do have another break of structure here, right? Again, it's all based on a little bit higher time frame, but essentially this is how it played out, right? So we have this order block here. This is the 5 minute order block. We have a liquidity zone above this area here, which has been swept. People who are breakout traders are going long here, right? And who's to say it might continue upward? For me, this was clear manipulation, and it's just a matter of understanding what price is doing, right? It created a high, right? Overall, my target is up here, right? But there's no entry for us, right? These order blocks in here, there's slight substructure breaks, right? But these aren't, to me, they're not true order blocks. They don't break major structure. They don't leave imbalance. Right, we can see on the 15 what it looks like. Right, this isn't clear order block stuff, right? We get a break, retrace. Let's see what happens next, right? Price then continues to come to the upside, which gives confirmation to the people who are long. And if they haven't gone long yet, they start to go long. They place their stops down here. Price then starts to rip away. So 1, grab liquidity up here. 2, looking for liquidity down here. 3, order block right here. When you have liquidity zones right after your order block, this gives this order block a little bit more confluence. It gives it a higher probability that price will react to this zone, right? Price then reacts to this, which again probably gives people a little bit more confidence that it still might go long. And then what does price do? It creates another, let's go back to the 5. It creates another double bottom, right? A lot of people like double bottoms in the retails trade, right? This might be support. This might be a double bottom. We know it as equal lows, where liquidity sits below, right? So in all of this, I have not entered any trade. There's been a lot of moves. There's a lot of FOMO. There's a lot of stuff going on here, right? We got a break structure to the upside. We got an order block created here. This is the New York low. We've got liquidity. Liquidity's already been taken out here. So next thing for us to do is to sweep these liquidity lows, tap into our order block, and then go, right? Now, I did enter my order block on the 1 minute time frame, so I'm going to place that in there now so we can just see. Obviously, you could have traded the, you could have traded the 5 minute and been totally fine. Oh, sorry, this is the 1 minute.